All right, stocks came back from the weekend heading into a new month pretty strong earlier, especially overnight. But that strength wasn't able to hold up. Some of it held up by the time we started, but definitely didn't hold up by the time we finished. We finished near the lows of the day today, across the board, to the point where now, there's always been this kind of two-headed market, right? The strength in the large caps and large cap tech specifically, and weakness in the Russell and those sectors. Well, today everything was weak. So I'm going to show you kind of what that means, what it looks like. What did that do to the market posture for the S&P and the NASDAQ 100? What did it do to what we were expecting to see from Friday's video in the Russell 2000? And how can that bleed its way into a broader move in the markets instead of this kind of focused move up and down and inhale and exhale in certain areas of the market? So I'm going to break that down, talk about what's driving. There was a interesting little bounce back in the market here in one specific area, asset class today. That's been doing so poorly recently. But then there's another big move to the downside in another asset class that might also be when you pair it with a couple asset classes might be telling us something about risk appetite in general, based off of economic growth expectations from a market perspective. So I'm going to break that down. Our trade idea today is a trade that we're going to do as a speculative directional trade that we're going to do, but it's got a good chart pattern to support the opportunity for the trade, but it also fits inside of all the other trades that we've been doing from an options Greeks management standpoint. So I'm going to talk about that. So let's go ahead and get started. Today is Monday, August the 2nd, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicators. You can see pretty significantly bearish short-term sentiment. Again, that near-term line dropping to, what did we get down to? 1220. Over here, we got down to 1220, 12.1858. Those are the two lowest levels that we've had on the near-term line since we've since we've had this bullish move. I mean, over here we got to 12.77, and that was, and again, intermediate pullback for the NASDAQ and intermediate pullback here from the Russell, and so that's more of a bearish short-term sentiment that we've seen. Especially, I mean, last time we were this bearish on the short-term sentiment, we were flirting with the 30-day moving average. This time we are actually not even below, I believe, the 17-day moving average. So significant from that perspective. Not as extreme in the oversold. Like, we didn't drop to below the 5th percentile momentum line, so we can very well just bounce right off of this tomorrow. Of course, your Russell 2000, the intermediate line turning back down, just barely though, but turning back down. That's why we have the dark pink shading. We're obviously still below the moving average. The short-term sentiment is rolling back over. I mentioned this bullish divergence on Friday, and I believe last Wednesday too, but I mentioned this bullish divergence here with the lower highs and the higher highs going into that resistance. So that's rolling over. The near-term line's coming down below 50. Momentum line getting down to another low level. And the market sentiment's rising, but still not getting back above 60. It's kind of stuck in neutral range, which makes sense because the NASDAQ or Russell is about as sideways as you could possibly be here over the last so many months. Very, very sideways. But short-term sentiment, if you look at the NASDAQ, let's take a look at the NASDAQ. Come over here. You can see not so bearish on the sentiment. So we had gapped up pretty strongly this morning, and we fell during the day, but we didn't close. We didn't even close with a loss. It actually finished slightly higher. So the near-term line did drop below 40, ending this little near-term rally. But the momentum line didn't get to an extreme low. It's not. The intermediate line still well in the upper reversal zone. So a little bit of weakness on the Dow as well, but nothing too significant that it's like, oh, we need to really be concerned about things in terms of whether or not like this is the impending doom of the S&P 500. Of course, the Russell still tells us that that's probably coming, right? This broader weakness that we just haven't had. Like, we've had sporadic weakness in different areas, very specific areas of the market. not a full on like last September where everything went down to a certain degree. So we haven't had that yet, and that's what brings the S&P 500 down because of the broad nature of the index, being amalgam of all these different sectors. That hasn't happened. The intermediate line hasn't dropped. It's dipped below 50 a couple of times, but not in conjunction with the red line, not dipping below 40, which is where your bearish territory is. Is this a little heads up? I mean, we've had a couple of them now. This is, a couple of short-term bearish moves in the past, really since July expiration, so the past couple of weeks. So, a little something that we might need to be aware of, but nothing looming necessarily immediately in the very short term. Let's take a look at some of the other charts that we have here. So bear with me 1 second. While we look at this, you can see the candle, the body getting smaller. So that, I brought up that Hakinyashi differential here in the past on this chart just to show you the direction of the size of the bodies. We got a really good strong body there, but the body's been progressively getting smaller on the S&P 500. They haven't gone negative yet, but you can see the average is moving down too. So bullish candles, but obviously losing momentum, as you can see across all of these. And the Russell 2000, the Hakinyashi, here, let's go back here and look at the Russell 2000. You can see the Hakinyashi candles actually turned positive. So, it's not the first time, but it's the first time since we went. This is the most negative that we've been on that bearish candle. That's the furthest the 3-day average has gone down to on any of these declines. Even on the actual September, on that actual intermediate pullback, we are more bearish now than we were then in terms of how big the candles are. These bearish candles are, and it would be still a lower high. So I'm not too bullish here. Like, we had a transition candle last week. I still think it's kind of a transition candle this week, and we're not getting back above the 50-day moving average. So we're hardly in bullish breakout mode on the Russell 2000. You look at the 3 green arrows for SPY, there's the 1 red arrow, so that stands out. You look at the 2 line versions for the SPY, you can see both the MACD and the stochastics breaking below their moving averages. Of course, that's some weak. I mean, we're still converging. That's nothing surprising there. But you notice we're converging still above the 8-day moving average. So we're not necessarily bearish either. We're just not as strongly bullish. If you take a look at IWM, we talked about on Friday that not a good sign to be trading between the 17 and the 30 and not breaking through both of them, at the same time. It's a good sign that we might reverse back down and close back below the 8-day. We talked about that on Friday. Well, this morning when we were gapping up, that it looked like it was a very small likelihood that would happen. But by the end of the day, which is why the close is a lot more important than the open, by the end of the day, we actually ended up closing down below the 8-day moving average. The MACD histogram rolling over. You can see the MACD itself, which has been on this bearish convergence, potentially rolling back down and rolling, going negative again, turning down, and starting to diverge again. Of course, that would take more dropping below the 8-day moving average. You can see the stochastics has gotten above 60, but the moving average is sitting right there at 60. If you take a look at some of the other oscillators and where they're at in their bullish or bearish territories, you can see the RSI kind of hit some resistance there at 50. The CCI kind of hit some resistance at positive 100. Looking at the directional movement index, right? It's like, here's why we're not very bullish, because we're not really breaking out. We're really converging here on SPY. And then IWM, we were converging, but we're still not to that point where the ADX is back down below 20 and we're bearish, right? We're still in a directional move. That's what makes the ADX start to rise. When you're above 30 and you're below 20, we're above 30, we're not below 20 yet, but you can see we're working our way back down. When you're in these bearish, like when you're in a trending move and the opposite line makes a brief move up and then turns back down, then that's kind of what we potentially may be seeing right here on the Russell 2000. let's take a look at trend strength indicators. We're still not bearish yet here. Very strongly bullish trend still on SPY. On IWM, you can see we're turning back towards being above 65 and below -2. So being back towards, the bearish trend, and you see how we held the Ichimoku cloud so far for resistance as well, and got back down below the blue line after being above it. The 3 green arrow chart here in IWM, you can see we were really close to 3 green arrows there, and now looks like we might be rolling back down. And the same thing we talked about on the market forecast, right? We did get some bullish and light green shading, not quite the yellow line, and now we're back to dark pink shading and a red line. Let's take a look at the intraday chart. That's not the outside day here. We gapped up above, filling in the rest of that gap from Friday, and then we filled in today's gap today and moving our way down. So not the most bullish pattern there. You can see IWM working its way below yesterday's low as well, holding this point of control in the 4-week chart so far for a resistance level. Very small range very small range today, about 3 3/4 points. The volume at 58.5 million. Those are not necessarily the most bullish or bearish volumes. As you can see, 58 million is way down here, so it's actually bringing the line down. The trading range is right about at the average, which is still very low and rising. And what stood out too is the volatility ramping up, and that's not surprising either, because that's what happens on Mondays. We go down on Fridays and we ramp up on Mondays. But you can see how we're already back to 20. We're already back to 85th percentile. Remember, it's hard to go from 80 to 105 and start an intermediate trend. It's not as hard to go from 85 or 90 to 105. So it appears that we're kind of gradually working our way up towards these levels before, if we ever get a volatility spike that would actually get up that high, we're getting to the levels where that can occur, because obviously it wouldn't occur from these extremely low levels here. I heard on TV today that the volatility was spiking, but it's like, when you're, no, this isn't the one I wanted, the seasonality. When volatility is, right, let's see here, seasonality is right here, we're still 28% down, and, we're trending higher, but these are spikes, right? This is hardly a spike today. And you can see that, this is the time of year up until about August the 12th that we do get a pretty decent run in volatility. We'll see if that ends up being the case or not, because remember, when you get these bullish moves, it's, volatility doesn't grind its way up. Usually you get these kind of big spikes. So, right now we're kind of grinding our way up. I don't expect that we'll continue to grind our way up. At some point in time, if we maintain this period of volatility, it will be with some volatility spikes that will be working their way up right now, and that just isn't necessarily the case yet. But this is the time of year for those to occur more frequently than in previous months. One more chart we didn't quite take a look at here, the Bollinger Bands and how they're doing. You notice now, again, we are clearly not in the bullish. So I think the theme here is the S&P and the NASDAQ. NASDAQ is still a little bit more bullish, but you can see it's just barely below the 75th percentile now. But the S&P is now not nearly as bullish as it has been. It's not bearish. Whereas on the other hand, the Russell 2000, which had been bearish, is still pretty neutral, but leaning towards a lot of these resistance levels that we've been pointing to holding and rolling back down. So we talked about that expectation going into this week, and we're seeing it on some of these charts. All right, before we look at some other charts here, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us 2 things. Number 1, you liked our video today. Number 2, that you think that other people should check it out too. Because when you click on that thumbs up, YouTube will share the video out to more people because of the engagements it has. So we appreciate those who do that. Also, comment down there. What stood out to you? What questions or comments do you have? Post those in the comment section below. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free and to get a unique offer to be able to check us out, to see what we're all about here at Market Scholars. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, then click over here on some of these other things on the right. For those who have access, our paid access to our site, you can also watch these Market Outlook live videos. So every day I do the Market Outlook. I also do a live video at 3:30 Eastern Time here on the site. You can get to it by clicking this, or you can come over here and click on Market Outlook Live Trade Review. Again, this is where we review the trades we've already done in previous videos to see whether we should stay in them or not. So that's what we do in that video. We also put on today's trade idea that I'm going to share with you at the end of the video here. We already put it on before the market closed today. So if you want to get that, again, you get access to that there. And you can see the upcoming trading rooms as well. Again, just subscribe to our site for free to be able to check that. When you check us out, we have an offer for you for our month-to-month, so you can be able to see what it is that we offer you. Come down here to the bottom, click on this heart. It opens up a new tab. Hit that like button right there. Also click on this thumbs up icon, opens up another new tab. Hit that like button as well. That comes up there. Again, the more you do that, it really helps us out because our content gets to more and more people. You can see here that it's kind of getting to fewer people on Facebook. So that's why we keep asking for the likes there and on Twitter as well. Again, it really goes a long ways for us. It helps us out. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, now let's take a look at what's driving this price action here today. So let's go to this chart. We'll go to the asset class comparison. Just looking at today alone, you can see what's been performing well over the last 3 months. We talked about that on Friday. Kind of a crazy mix of different asset classes there. But just looking at today alone, you can see emerging markets bouncing back up from being very weak here recently. Long-term bonds bouncing up, and then commodities really falling hard. High-yield bonds falling hard. Small-cap stocks, which are doing very, very well at the beginning of the day. Then you can see they had a little rebound here in the middle of the day, and then finished very poorly. With the Qs also finishing poorly, coming well off of their highs of the day. So let's take a look at some of these charts. Let's take a look at how the dollar performed, because that has had an impact on things. You can see the dollar's been falling as the euro's rallied, but we're kind of hitting up against this Fibonacci resistance level at 62%. There's still some possibility if we were to stay risk on that it can go up to about that 119.70. So that's still there. You can see we did open down. We gapped down, which is pretty rare for the Euro-US dollar to gap down, but obviously it can gap over the weekends. It gapped lower, rallied pretty significantly, and then came off of its highs of the day. You can see there's the move up, and then we came down by the end of the day today. So pretty bearish move, and you can see that's brought the short-term sentiment lines back down out of bullish territory. You're still in bearish territory in the intermediate line, though. You probably got another day of that happening, depending upon whether or not this resistance holds at that 23% retracement of this current run, or the 62% retracement level of this big long run that we're still consolidating. Like we haven't broken out of the 23% line to really get going. We tried a couple of times, but we haven't broken below the 78% line to reverse the trend either. So we're actually still consolidating that bullish move right there, as we kind of sit around and on the current move lower, current leg lower, we're sitting right at that 23% line. Again, you've got that very long-term market sentiment run off the COVID lows at this 23% right up here. So that's why I say there's some pretty strong resistance at that 119.70 level, the midpoint of that run that we're still consolidating. You saw that big move on bonds. Bonds are still bullish, and you're still dark green shading the green line. You're trending higher. You're moving higher. You're moving towards where I believe eventually will be about 155.50 into this area here. maybe up towards this 158 level. So somewhere in here, there's a lot of volume resistance at that point. If you take a look at this chart here, you can see that's where all that volume resistance is. At the top of the value area, there's a big volume node up there. So I think that ultimately that's about where we'll peak while we're still in risk aversion. See, gold and the dollar have been telling us we've been in a risk aversion trade. Gold has been kind of stuck, but you can see it's in a value area. It's not really going one way or the other. It's still also trapped inside of 78 and 23% lines without going anywhere. So it's still in retracement mode, consolidation mode, all around that point of control. We're lower than it right now. So, again, it's kind of hard for gold to get going too bullishly with the dollar rising, which you'd expect in a risk aversion trade. But when they both rise together, that's when you know that everything is falling, right? We are in full-on risk aversion, and it's not just this, shifting weakness in different spots of the market. Of course, the biggest loser on the flip side today was commodities, and you still got, you got a big point of control up here, and we're still actually above it. We're in the middle of the Bollinger Band, so we're hardly turning bearish at all, but still is one of the bigger declines that we've seen after this big long convergence after peaking over here. Actually, the histogram peaked, and then the MACD itself peaked way over here, and then we've been converging, brief little turns to the downside, but it seems like that's the type of turn that we're headed towards right now. Here's the market forecast for the commodities, and you can see that we have strong bullish posture, but we had this divergence going into that previous high point on the near term line, and now we're falling back below 50 on the near term as well. So there's some signs that things may be turning around a little bit. Here's the DMI. The things might be turning around a little bit from a commodity level as well. That negative line bouncing back up, and the positive line getting back below 30. Your ADX still very low, so you're still kind of in pending breakout mode here on these different asset classes. Let's take a look at how the different sectors perform today. So let's come over here. Oops. Let's go more than just an hour. Let's go down here. So here's how the different sectors perform. You can see energy, material, or financial did very well. That's the Russell 2000 trade, right? That's why the Russell did so well early in the day. By the end of the day, energy was down big. Financials was flat, but energy was down big. Materials had a really good start today with industrials. They both ended down well, so it was a very strong move for this Russell 2000 trade. And then bammo, and then small, of course, discretionary holding up okay. Amazon being a big influence there, but this technology and communication services also lagging. Utilities being your best performer. This was about as risk off of a day broadly that I've seen in a while, where not only did the XLK, XLC, XLY type trade underperform, but so did the XLB, XLE, XLI, XLF trade underperform. So that's the that's when you get all of these going down, that's when you're on risk. That's when you're on an intermediate pullback, and usually the middle row has been bearish here lately. It's the top row that's been holding up. But look at those engulfing patterns on materials and industrials, long upper shadow on financials, energy rolling over with dark pink shading and a red line, and now we're finally getting more bearishness as we converge up here on the top. We've already dropped below 80 on the XLC, and you can see the safe haven trades kind of holding up, dark green shading and green line. So it looks like from a rotation chart that things are gradually working their way over to these to risk off mode. Look at this, the weeklies. You can see industrials, materials, financials, energy just all really moving up down to the left, right? And XLK is still moving up to the right. But if you look at the daily chart here, And then you can see, okay, energy is still really lagging and very weak relative strength. Materials, industrials, financials, they're in the improving category, so they have strong momentum, better than average momentum above 100, but not transitioning that into relative strength yet. And then what you do have with relative strength, even if those losing momentum, is your utilities and your staples and your healthcare. These are safe haven areas, along with real estate, which is also still maintaining relative strength. XLK is moving down to the left now, along with XLY and the lagging. So there is we're getting a shift towards risk appetite, and we're shifting towards safety over here on a long-term basis, and especially shifting away from these small cap areas, which have been associated with risk appetite lately. It's actually XLK, which has been more associated with risk aversion lately. That's why Qs have been doing so well while the Russell's been down. But as you can see on the daily chart, that might be starting to change a little bit, with XLK working its way down to the left. All right, so that brings us to our trade idea of the day. And our trade idea of the day is kind of, it's not something to look at by itself. It's something to actually look at with all the rest of the trades we've been doing. The rest of the trades, especially in my total class portfolio, has actually got a lot of negative deltas. I mean, we're pretty positive in this portfolio, a lot of iron condors, but we've got a relatively negative delta. So we've got an open window with all those negative deltas to do a positive delta trade. To throw in a bullish trade just in case, right? Just in case the market keeps going, turns back up and goes for a 10th month on an intermediate run, or whatever the case may be. And I've also got a lot of negative deltas, or Vegas, because of the iron condors we've been doing. So in other words, we want volatility to go down, but it appears the volatility is actually on an upward trend. So I want to be able to offset that. So the stock I was looking at is a stock that has had a little bit of a bullish breakout on its own, Tesla here, off of its highs of the day, but still closing above these highs. Dark green shading the green line, getting back above 60 on the intermediate line. Rising market sentiment shows you some potential that it has there. You got a bullish Hakinyashi candle this week. So far, it's only one day in, but after all these transitions, it's the biggest bullish candle we've had in a while. With a PPO, it's been so far down and rolling back up. You can see from a 3 green arrow standpoint, we have 3 green arrows again. We are, like I said, closing above those, diverging on the MACD. Stochastics getting above 0. You can see from the other oscillating charts from the RSI standpoint, getting above 200, very bullish. Getting above 60, bullish. When you look at the DMI for Tesla, you're well above 30, getting above 35, dropping below 20. So a nice little breakout pattern with a rising ADX. If you take a look at the Ichimoku trend cloud, you can see we're getting above the cloud in the last few days. The red line today getting above the cloud, and the price as well over there. So we don't have a strong bullish trend yet. In fact, it's not even really a weak bullish trend. But you've got, you can see the potential that we have, and you can also see how we broke out up above the upper band, very low bandwidth. So we're breaking above this volume node, breaking above this 38% retracement. So there's an opportunity for a breakout. Whether one occurs or not remains to be seen, but there's an opportunity for a breakout to occur here. You can see we were outside the Keltner channels as well. So, kind of watch for tomorrow, see if we follow through on that Keltner channel. We're still outside of the Bollinger Bands. They're so tight, setting up for a squeeze. So okay, well, here's an opportunity for me to take a very low risk trade, keep my risk very minimal, and go for a good reward if it does go up. But I'm going to do it in a way, so I'm gonna buy an out of the money call for September, and I'm going to go out to the weekly options, because the regular options, the strike prices are only like $2 way over there. But once you get up to these higher levels, they were $20. Yeah, they're $20 over here on the side. They're $5 up here. So I actually went to the weeklies instead, so I can get some plenty of strikes, available strikes. And I wanted to go for a $10 wide because it does limit in terms of how many contracts I can do. And if you take a look at, I bought that 820 call, I sold 830. That's a pretty good distance away. It's got to move. It's got to get back through that resistance and back up here. So the idea is that we're breaking out and we're starting a new bullish run towards these highs. Like we've pulled back, we've held support, we're breaking back above the 38, and we'll work our way up. And in so doing, I have a trade with a lot of positive Vega, relatively speaking, a lot of positive Vegas, positive deltas, and only some negative thetas. So I have a ton of positive thetas in our class portfolio. So I get back some of that, but this is what I wanted. So I wanted a speculative bullish trade to add to the mix, something that's got potential. If it doesn't make it, I've got a really small risk, so I'm not too concerned. If it does make it, I get a really good reward for that small risk, but I get positive Vegas relative to the S&P because these are beta weighted, was beta weighted here to SPY. So here, let's beta weight to SPY, and here let's hide positions and just look at the Tesla trade. So sorry, let's come over here. There we go. So here's our beta weighted, here, let's go to SPY. Here's our beta weighted delta on Tesla relative to SPY, and then there's my positive Vegas. So these are the two things I wanted with this trade. And if it works out, great, I get a good return for a small amount of risk, for a very, very small amount of risk. And of course, it's the week before September expiration, so it's that 9:10 there. And then you can see when I go back to Tesla here, that that level is within 1 standard deviation. It's pretty aggressive. But again, I went that far because I wanted the deltas and I wanted the small risk for a really, really good reward and the positive Vegas in the meantime. So if volatility continues to rise, this kind of position won't be nearly as impacted. So it helps moderate me a little bit with all the negative deltas I currently have in my portfolio. Just looking at the market outlook, all the trades that we have in the market outlook alone. So now let's come here and show all the previous trades that we've done in the market outlook category, including this Tesla trade. Actually, let's get rid of that Tesla trade now. So these are all the trades that we still have on. Again, you can see without the Tesla trade, I have a pretty negative, pretty positive delta, but even worse, an even bigger Vega than my delta is, with a lot of positive data. So I can give some of that back and reduce my Vegas a little bit so they're not nearly as extreme compared to the deltas. That's the idea. So this trade kind of works in conjunction with a lot of the other trades that we've been doing in these videos, as well as in the rest of my classes too. Just to kind of give you an idea of if I were to do my whole margin, how my portfolio is. And I told you that my Vegas were negative. Now they're still pretty negative, but not as bad as they were. I've got negative deltas overall, and I got a lot of positive theta. So I was willing to do a directional trade that was negative theta if it could help me with some positive Vegas and some positive deltas there. All right, well, that does it for today. You've heard from me. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread with any questions or comments you have. Reply to anybody else's threads. And let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Like us on Twitter and Facebook as well. Hit that thumbs up icon. Like us on Twitter and Facebook. Comment on the video. Have a great rest of your Monday night, everybody. And we'll see you all next time.